Ladies and gentlemen, a warm welcome to everyone. I hope you are all safe and in good health. Thank you for joining the enrichment session today for Strategic Business Reporting. My name is Joanne, the Manager of Learning Support for ACCA Malaysia. Having here with us this afternoon is our speaker, Tom Clendon, and he is an expert tutor for ACCA. So with his over 30 years of teaching experience, he has helped thousands of students pass their exams. So we hope you are one of them too. All right. Now, before I hand over the session to Tom, let me quickly run through the housekeeping item with you. There is a chat box function in the Zoom platform, and we will be using that to communicate with everyone. So if you have any questions to clarify while Tom is presenting, just type them in the chat box and then select send to everyone, just like how you did just now, okay? And Tom will actually address your questions whenever possible. Otherwise, you can actually save up your questions and ask towards the end, all right? Let's not waste any time. Let's get started now. Over to you, Tom. Thank you.
Thank you very much, Joanne. Let me start my presentation with a fresh share, and let's have a full slideshow. So yeah, fantastic. Welcome everybody. We've got 3 hours together, and I want to make the most of these 3 hours. And let me tell you a little bit about what's going to happen in the 3-hour period. I want to introduce myself. I want you to introduce yourself to me. We want to have a little brief kind of upfront conversation. But this is revision. I'm assuming that you're doing the exam in June, and I'm focusing on a couple of really key areas that relate to the June exam. We're going to look at group accounts, we're going to look at ethics, we're going to look at a current issue, and maybe along the way there'll be 1 or 2 surprises. Now, towards the end of the session, I'm budgeting sort of 15 minutes or so at the end for any questions. For questions on any topic relating to SBR, relating to ACCA. So there'll be a kind of an open house, and we can use the chat box to do that. But from time to time, there will be opportunities for you to use the chat box and engage with me, and I can see the chat box. So if I'm saying something that you violently disagree with or you need clarification on, just jump onto the chat box and kind of let me know, but it has to be relevant to what I'm talking about at the time. So look, let me not waste any time. Let me just get on with my presentation. And the first thing I want to introduce to you is myself. I am ACCA. And in that I mean, I did the ACCA qualification, just like you are studying now. When I was in my 20s, I was also working and studying ACCA at the same time, juggling. And of course, I didn't have, because I'm very old, the benefit of any kind of internet or any kind of support that the ACCA provide now. I used to go along to my local college. I used to open up my books, and I struggled, but I qualified. And when I qualified, I was working in practice. I was working for KPMG. And I dealt with bankrupts. I dealt with the bankruptcy, or the chap in my office actually dealt with the bankruptcy of George Best, the famous Man United footballer who went bankrupt many years ago when I was a young ACCA member working at KPMG. But I quickly discovered that my true vocation was not in administering bankrupts, not working for the Big Four, but teaching. I fell into teaching. I used to work for a company called Emil Wolf, and then we became FTC, then we became Kaplan. And I was involved in running the Kaplan office at a Borough High Street for many, many years, and that gave me fantastic opportunities to teach across the world. I have been a regular visitor to Malaysia for over 20 years. And in fact, I took an opportunity several years ago to live in Singapore, to base myself in Singapore, and I taught across the Southeast Asian region. So it's somewhere that I know and I love, and I wish I could be with you in person. But when I came back from Malaysia, I wanted a portfolio approach. I decided to engage with my life, my teaching life online. And so I do work for ACCA like I'm doing now, but my primary day job, if you like, is working for a company called FME Online. So I've always been engaged in teaching. I've always been engaged in helping students pass the exam. It's kind of what I do. So that's a little bit about me. Now, what I would like really is to know a little bit about you. And one way that I can find out a little bit about you is to ask you to answer a question on a poll. Now, these polls are anonymous. There's no right or wrong answer. I am just curious as to where you're at and to the kind of makeup of the room. So ACCA is all about choice. There's lots of choice. You can choose the paper, you can choose the order in which you're doing papers. And one of the choices you may have is whether you're doing the exam in a center, in that traditional way, or whether you're doing your exam at home. And I can see that a number of you have already answered, but I'm just going to give it 5 more seconds. 5, 4, 3. I see people still voting. Yeah. And let me call it quits there. And I can see that the majority of you are sitting the exam. Oh dear, that's all come out a little bit wrong, hasn't it? If I look at that quiz question again, are you sitting the exam at CBE? Yes, you are. Are you sitting the exam in a centre or CBE remote? Oh dear, that question is nonsense, isn't it? My apologies. My apologies. I didn't double check that. What I was trying to find out was whether you're doing it at home or whether you're doing it in an exam centre. That really wasn't, that didn't work, did it? If you're doing it in an exam centre, fine. Make sure you get there early. Make sure you know where their exam centre is. Yeah. If you're doing it at home, you've got responsibility for your IT. If you're doing it remotely at home, remote invigilation, please, please, please make sure that you update your systems. Make sure that you follow all of the instructions that are necessary to do that, because you have to get it right. You have to get it right. Okay, second poll, second question. I'm wondering where you are at in terms of your ACCA journey. Yeah, I wonder whether you're a virgin when it comes to strategic professional exams, or whether you've got them under some already under your belt. So this question makes a little bit more sense to me. So just another moment for the rest of us to catch up. And gosh, it's a very tightly fought answer, and I'm gonna call it quits there. Oh, it was 50-50. It is from an interpretive point of view. Half of you are doing your first strategic professional exam, and half of you have already passed another strategic professional exam. And I think if you've already passed a strategic professional exam, you kind of know what it takes. It takes a bit more. There's a step up from skills. There's a step up from university. And so if you're doing your first strategic professional exam, pull out all the stops, please. Pull out all of the stops. Yeah, leave it all on the pitch. Yeah, leave no stone unturned, because yeah, these exams are tough. These exams are tough. Right, poll number 3. And we're talking about mocks. We're talking about mock examinations. You can do a mock examination. Yeah, we are a few weeks away, we're days away from the actual exam. And I'm seeing a pattern here. I can see the voting pattern as it comes in. And I can see there's a clear winner here. There's a clear winner. And that clear winner is that the majority of you have not yet done a mock, because you are going to do a mock, aren't you? You are going to do a mock. In fact, you may do more than one mock. There's a mock that's available on the ACCA practice platform. I urge you to do it. Yeah? You've got to prepare for this exam professionally and properly. And part of that ingredients is to do a mock examination. So if you get nothing else out of this session other than the importance of doing a mock, please, yeah, that's a good takeaway. There's an uplift. ACCA have done some research. There's an uplift, 12%. You are more likely to be doing, you are more likely to pass an exam if you've previously done a mock on the ACCA practice platform. There's an uplift of 12%. Yeah, it's quite sharp. It's quite incredible. So yeah, so well done those of you who have done a mock already. I hope you're going to do another one. And if you haven't done a mock already, then you are going to be doing one. That's the way it is. Right, now I've got a fourth poll. I normally only do 3 polls. I like 3, but I normally only do 3 polls. But I thought I would ask you whether or not you have Instagram. I'm curious. I'm nosy. I like Instagram. That's the point, I suppose. And I'm seeing there's a very strong favor in terms of people who do have an Instagram. So 90% of you, I mean, that is a phenomenal proportion of you have an Instagram account. And I suppose I'm validated in what I'm about to do now. I think Instagram is fun. It's not a great medium for communicating big technical stuff, but you know, I use Instagram. I use Instagram. And what I want you to do is, if you want to, you can follow me on Instagram. We can connect on Instagram. And I think there's 2 reasons for that. First of all, later today, I'm going to be doing a lucky dip. Later today, I'm going to be offering one of my Instagram followers an opportunity of a free course with me, a free mock exam course with me. So if you connect with me on Instagram, then you can enter that lucky dip. All right. Secondly, between now and the exam, I'll be doing an Instagram live about SBR. All right. So there'll be a sort of a Q&A session. I'm leaving this screen up there for 10 seconds, 15 seconds. So there's an opportunity for you to reach for your phone and to find your Instagram account and connect with me. Or you can just do a QR code there. You can see my Instagram handle. My Instagram name is Tom Clendon, SBR lecturer. So there's a free opportunity here for a mock exam, a mock course to help you for the June exam. And I'll be doing a draw later today. All right. So that'll be done. That'll be launched on my Instagram. Thank you for your patience. We have been faffing around. The reason that you've logged in today is because you want to pass the exam in June, and I want to help you do that. And one way of doing that is working questions, making sure that we are up to date. And before we go into the practice platform, before we start working questions, which you won't have seen before, Look at this screen. This is one of my favorite slides. I'm talking here about exam technique. What is happening here is somebody is trying to make the question fit the answer. And I think that's the wrong way around. We cannot go into the exam with a preconceived answer and try and make the question fit our solid answer. We've got to be open-minded and flexible so that we answer the unique question that's in front of us. We cannot make the question fit the answer. We cannot do that. That's impossible. It's not what we're about. We're about answering a unique question. We've got to answer the question. Yeah? When you've read that and you want me to move on, can you put a Y in the chat box? When you've read that and you want me to move on, can you put a Y in the chat box? And when I've got 20 Ys, I will move on. Thank you, Benjamin. Thank you, Chang. Thank you, Victor. Thank you, Anna. Thank you, Ying. Have you seen that before, I wonder? Google. You are not Google. You are not being tested about your ability to rote learn. You're being tested on your ability to apply your knowledge. Application, application, application. Yeah, breadth rather than depth. This is a direct quote from the examiner, direct quote. So, you know, got it from the horse's mouth. Does anybody know where that is? Today is the last day of the English Premiership football. Maybe some of you have been to this football stadium. I don't know. I haven't. Does anybody know the name of this ground? Can anybody put in the chat box where this is? Yes, Victor, that is correct. Samantha, maybe you're a red as well. I don't know. You'll never walk alone. Exactly. This is Anfield. Now, some of you like football, some of you don't. Some of you may even like Liverpool, some of you don't. This is an analogy. This is a story. When Liverpool play at home, they're almost certain to win the game. They're favourites. They've got the crowd behind them. They know the dressing room. They know the size of the pitch. There's something magical about playing at home, which means that Liverpool always seem to win at home. Now, when they play away from home, when any football team plays away from home, you're slightly on the back foot. You may or may not win. Every football team in the Premiership has a better win ratio when they're playing at home. Home is familiar. This is Liverpool's home, and this is going to be your home. You've got to make the ACCA practice platform your home. You've got to revise and do mock exams and work on the ACCA practice platform so it becomes second nature as to how to control, copy, paste, how to move the screen around. Now, for some of you, this is already the case. If you've passed an exam already at Strategic Professional, you've already sat an exam and passed an exam, maybe SBL, I don't know, using the practice platform. But if you're new to the practice platform, don't, you've got a couple of weeks left. You've got to make Anfield is a fortress. The home team are going to win. You've got to make it that the ACCA practice platform is your fortress and is a place where you've had success and you've won, so that you get that comfortable feeling in the exam. Please, 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 yeah, remember this and act upon it. Act upon it, yeah. You'll never walk alone. You'll never walk. I won't sing anymore. Right. I'm on the ACCA practice platform. This is how it looks. And this is a question that you won't have seen before, because this is a question I rent some space from the ACCA practice platform. So what we've got here is a stem, is some background information about a company called Palace. They're preparing the accounts on 31st December 2020, and they've got 5 exhibits: Diana, Arden, Ramaphosa, Convid, and a pension scheme. This is question 1 from the exam. Now, I know what I do in the exam. As a matter of principle, I open up the requirements, first of all, and I don't read them. What I do instead is I Control C. Yeah, select all, Control C. Then I open up my word response area and I Control V. Yeah, and then I kind of reformat the exam a little bit. Yeah, so we've got different requirements. And this takes a moment, but it's worth doing. And it's really important for me because I've now only got one screen open, and I've got the ability to know exactly what I am going to answer. And these are the requirements. So I haven't earned any marks yet. This is just taking me a moment, but it's a necessary investment of time. Now, you've got to get familiar with the examiner's style. You've got to get familiar with the examiner's approach. And what we've got is draft and explanatory note, the directors of Palace, which addresses the issue in Palace as the proposed sale of equity in Diana. So we've got a proposed sale of the equity in Diana. Now, I'm being fairly slow at this stage. Exhibit 1 is Diana. Exhibit 2 is Arden. Exhibit 3 is Ramaphosa. Exhibit 4 is Convid. Exhibit 5 is pension scheme. And I look here and I see this is Arden. This is Ramaphosa. I don't need to read the whole question in order to answer part A. In other words, I'm going to be very, very aggressive, and I'm going to look at the sale of Diana. I've got this information here, yeah, and the only thing that matters to me, yeah, is I've got this ability to answer the question, and the only thing I'm reading here is stuff. So faffing around like this takes a minute. The more you're familiar with doing it, so you've now got the information. Draft an explanatory note. Now, when we draft an explanatory note, it means it doesn't need to be a formal format, which addresses the issues in how the proposed sale of Diana should be accounted for. Now, in my mind, immediately, there's one of 2 possibilities. Yeah, could we be disposing of it, or could it be a controlled control? Let's have a look. Diana had purchased a controlling interest in Diana for 50 million on the 1st of January 2016. So what we've got here is a 20% NCI. What we've got here is a subsidiary. And when we bought the subsidiary, the net assets were 40. NCI is a proportion of net assets. It's a cash generating unit. There's an impairment of loss. There's an impairment loss already being recorded. Now we propose to sell half the holding for 41. So this is what we're doing. We're selling half the holding for 41 million. So I'm thinking what that means to me is that I have digested that we've got an 80% sub with a 20% NCI, and that we sell half. So therefore we're going to be left with 40%. Now, intuitively, that to me means associate status, and that is validated because we talk about significant influence. Yeah. Then we've got goodwill at 80. We've got a residual value at 41, and we've got a gain. They've already calculated the gain on the disposal, and the gain is 15, being the sale proceeds less half the cost of the investment. Because we bought the investment for 50 million, and if we bought the investment for 50 million, and we are selling half of the holding, and we're selling half of the holding, then it sort of makes sense that they've reported a profit of 15 million. Okay, I'm chilled here. This is worth 8 marks. This is worth 8 marks. Now, if we've got 8 marks, what's our time budget? How many minutes is that worth? How many minutes is that worth? Tell me on the chat box. How long have you got to answer this question? Yeah. Zafir says 14 minutes, yeah? Anyone else? Yeah, what am I doing? What am I doing? I'm going to be multiplying by, a little bit more than 12. I'm going to multiply by 1.8. Yeah, I'm going to be multiplying by 1.8. So 8 marks is about, for me, is about 15 minutes, yeah? 14.4. So 8 times 1.8, I'm looking here at about 15 minutes. All right, you've got to get something like that. Answer plan. Answer plan. Let me tell you what I would do in answering this question. I'm going to assume that the majority of the marks are not for the numbers, but the majority of the marks are for the words. So what I've seen in this question is I've seen a disposal. What I've seen in this question, I think, is a correction. What I've seen in this question is, I think, an associate that we're left with. And what I've seen in this question is the opportunity of doing some numbers. So I've got 8 marks. And I'm thinking here that we've got a disposal. Yeah. Diana was a sub of Palace, but following the sale of half the shares, it has lost control. It has lost control and now only has significant influence. In future, Alice will be an associate, full stop. There will be a profit or loss on the disposal of the subsidiary reported in the group P&L. acquisition accounting will cease. Acquisition accounting will cease on the day control is lost. So if we want to talk about the associate, going forward, the associate will be equity accounted. I think it's a technical term. A single line approach. Good. So you can see what I'm trying to do. I'm trying to break it down. Yeah, I'm talking about the disposal. I'm talking about the associate. I'm going to talk about the numbers in a minute. And I'm going to talk about the correction. Is there a correction? Is this the right profit of 15? You buy the investment for 50. You sell half the holding. So if you buy it for 50 and you sell half the holding, you're losing 25 million. And the sale proceeds are 40 million. Is that the gain to the group? Is that the correct answer? Do we even need to do any numbers? You see, for me, the gain to the group should not be based upon selling the investment. The gain to the group should be based on selling de-recognizing the net assets, de-recognizing the goodwill. So the gain of 15 is not the gain to the group. Rather, it is proceeds less cost of investment it's the gain to the parent. It's the gain to the parent. The group accounts will de-recognize, net assets and goodwill and NCI and compare this with the proceeds to get the group P&L, to get the group profit, something like that. Right, I've done the hard bit. Now there's the easy bit, there's the numbers. I'm going to be quiet now. I'm going to be quiet now for a moment because you've got pen and paper, you've got access to a calculator, you've got another screen that you can go to. What I want you to do is to calculate for me, yeah, how the proposed sale of Diana should be accounted for. I want in the consolidated financial statements, there is an opportunity for numbers. There will be some marks for the numbers. Can you please try and work out for me the gain to the group? 2 minutes. Two minutes. What's the gain to the group? I want to see 10 people put their answers up before I start showing you mine. There's the information. We've got it on the screen. Wayman says 1 million. Thank you. That's quick. I like quick. You're going to make a mistake. Let's make it a quick mistake. I'm asking you to calculate the gain to the group. Some of you might have done something very similar at FR. There is an overlap between FR and SBR. I can't believe just one person has done it. Don't be shy. Alif, what have you got? Samantha, what have you got? Victor, what have you got? Amir, what have you got? Benjamin, what have you got? Hakeem, what have you got? Thank you, Hakeem. Thank you, Hakeem. Hakeem, sorry. Respect. $2 million seems to be the popular answer at the moment. If you're shy / given up, give me an emoji rather than a number. But I do need to see some more numbers. And if you just wanted me to move on, and oh, okay, a few more answers coming in. Adib, well done, thank you. So there's an answer about 1 million and there's an answer about 2 million, which is great. Okay, I'm just in my head going to count to 20. And then when I'm in my head, I counted to 20. I'm going to start going over the answer, whether you like it or not. Okay, so what I've got here is a need to do some calculations. And perhaps there's two different ways that you could do the calculations. We could either go into the spreadsheet functionality, but I don't think the numbers here are that complicated. So I'm inclined not to faff around. I'm inclined to just effectively use a, open up a table, yeah, and to calculate the gain to the group this way. And so the gain to the group would start with proceeds. And this is where a little bit of memory dump comes in. It's proceeds, then you're deducting the net assets. Yeah, then you're deducting the goodwill. Then you're adding the NCI. And then you are adding the residual. And then this will give you the gain to the group. Now, I don't want to be overly generous or overly raising your expectations too high, but fundamentally, if you do this, you're beginning to earn marks already. Now, what are the proceeds? So we propose to sell half the holding for 41. So you can drop the figure of 41 in there. What are the net assets at the date of disposal? The carrying value of the identifiable net assets other than goodwill is currently 80 million. So we've got the number there, yeah, of 80 million. So that's not tricky to pick up. Yeah, less the goodwill, don't know. I don't think goodwill has been calculated. I think I'll have to calculate goodwill. Okay, add the NCI. What's the NCI? I don't know. Or do I? Yeah, okay. I'll come back to the NCI. Add the residual value. Let me get the residual value sorted out. Now the residual value is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It estimated again 15. The residual value has been estimated at 41. Yeah, I can see 41. Now, if all you did was put those numbers in like that, you've got yourself a mark, at least a mark, because you've shown the structure. What we've now got to do is to calculate the goodwill. And do you want to open up another working for goodwill? How aggressive do I want to be? You bought the investment for 50. Yeah, that was the parent's investment. What you then got was an NCI, which was based on a proportion of net assets. So the NCI would be 20% of the net assets at the date of acquisition, which is 40. So therefore, we're looking at 58 minus the net assets at the date of acquisition, which was 40. So therefore, the amount of goodwill you would have had at the date of acquisition is 50 plus 8, 58 minus 40, which is 18. And then you've got minus 2. So therefore, the amount of goodwill at the date of the disposal that you're losing is 16. The amount of goodwill that you're losing there is 16. Now, if you think that's a little bit aggressive, maybe you're right. So maybe we could say just their investment. Maybe we could then say here NCI. Maybe we could then say here net assets. And then maybe we could say here, yeah, less impairment. So there might be a mark available for calculating goodwill. We've got it to be 16. Now, in terms of NCI, there's two different ways you could work out the NCI. There's the normal way, the long-winded way of working, excuse me, of working out NCI. And the normal way would be to take the opening balance. Yeah, the normal way would be to take the opening balance. What is the opening balance on the NCI? We've worked out the opening balance on the NCI is 8. How do I know the opening balance on the NCI is 8? Because that is effectively the share of the net assets at the date of acquisition. You would then add on to that the share of the post-stack. Now, the share of the post-stack that you're giving the NCI is 20% of the growth in the retained earnings. So the retained earnings at the year end, or the growth in the net assets. So you've got net assets at the year end of 80, but you had net assets at the beginning of 40. So you've got a growth of 20% of the difference between 80 and 40. So the share of the net assets is the post-acquisition is 40, 20% of 40 is 8, 8 plus 8 is 16. So you've got a way of working it out. But because NCI is a proportion of net assets, you're ignoring the impairment loss on the goodwill. If you're ignoring the impairment loss on the goodwill and NCI is a proportion of net assets, the other way of doing it would simply be to take 20% of the year-end net assets of 80, and you also then get 16. Don't test it. That's a slightly dirty shortcut. That's a slightly dirty shortcut. This to me will get you the full marks, even if you don't bother to actually add up, even if you don't bother to actually add up these numbers here, you will get the full marks. But 41 and 41 and 80 and 16, I'll tell you what I would probably do in this situation. I would probably use my calculator, yeah? And I would get my calculator and I would say, right, okay, I don't normally like the scientific, I prefer the standard. So I've got 41 and 41, which is 82. So I've got 82, yeah, plus 16 gives me that. And then I'm taking away 96. And if I take away 96, I then get a figure of 2. So well done. Most of you got the gain of 2, and that was the correct gain. Fantastic. Now, I think if we look at the marking guide, if we interpret the marking guide here, this is my answer. I've already slightly overrun on the time available. I would get a mark for identifying that we have lost control. I would get a mark for identifying that we've lost control. I would get a mark for identifying that we have got an associate. I have got a mark for identifying that associates will be equity accounted for. I have got a mark for identifying and explaining that this is the gain to the parent. Yeah, I have got a mark for talking about the de-recognition. That's a key technical term. I have got a mark for doing that. I have got, therefore, 1, 2, 3, 4, 5 marks in what I've done, giving me 3 marks available, perhaps, for answering the number side of the question. Just doing the format will be worth a mark. Sorting out the goodwill will be worth a mark. Putting in some numbers and making it look pretty will be worth a 3rd mark. It may shock you, it may surprise you that within the time allowed, this is basically what I can do, and you need to be direct and aggressive in order to pick up your marks. So I'm fairly comfortable that this answer, as it is, would get me 7 out of 8. Yeah, 7 out of 8. Doesn't need to be perfect. Doesn't need to be polished. It needs to be broken down. It needs to be structured, and the majority of the marks are available. And look, I've done this here and I leave it. I leave it. Never, ever use your scratch pad. Never, ever bother writing things down. You're not allowed to take paper in the exam anyway, but I don't think you are. And I wouldn't advocate it, because the marker can't see what you write down on the scratch pad. And you can't see what I write down on a piece of paper. Forget it. If you're going to do rough workings, yeah, if you're going to interpret it like I did here, yeah, leave it. Leave the requirement up here. Have we addressed the following issues? Yeah, how the proposed sale of Diana should be accounted in the group accounts. We have done. It's a disposal. We're left with an associate. There's a profit on disposal. The profit on disposal has been dealt with incorrectly. Associates are equity accounted. We've got to de-recognize the assets, the liabilities, the goodwill, and this is how we do it. Time out. Time out. Goodwill is 18 at the date of acquisition, Mohammed. You are correct. But at the date of the disposal, 2 million was impaired. There was an impairment loss of 2 million at the date of the disposal. That's prior to the date of disposal. That's why I was de-recognizing 16. Of course, this could be slightly neater. Of course, this could be a separate working. Of course, this could have been done in a spreadsheet. Of course, it could have been. Life is short. I'm only going to show you one way. Of course, it would be slightly neater if I, tidied up the presentation here. Of course, it would be slightly neater if I, remove that column. But it's not earning me any extra marks. By the way, here's a small trick. Here's a small trick. We had 80% and we sold half. So our sale proceeds represent 40% of the business. We bought 80% in the first place, so we sold half, proceeds are 40%. The residual value that we keep is 40%. And there's 20% of the business that we never ever owned in the first place. And the 20% of the business that we never ever owned in the first place is the NCI. The 3 numbers which are positive, credits in this example, the 3 numbers which are positive add up to 100%. I'm not sure that I can, this is not earning you any marks. This is me just slightly showing off. But I like the idea. I want you to sort of, at this stage, be comfortable with that. Just as a small aside, there's a bit that we're selling. There's a bit that we do. A risk. Yeah, I'm going to do a risk. I'm going to say nothing for 6 minutes. I'm going to give you the opportunity of thinking about and trying can you work out an answer in the next 6 minutes? How should the proposed purchase of equity in Arden be accounted for? You do it for 6 minutes, then I will do it for 6 minutes, then we'll take a break. Over to you. I'm now being quiet. Right, you've had 6 minutes. I'm going to give myself 6 minutes as well. Let's see what I can do in the time. We've got a 70% interest in Arden. How is the proposed purchase of equity in Arden should be accounted for? Well, that's a sub, isn't it? Yeah, so you've got a 70% interest. The NCI was initially measured at fair value. And now 2 years later, we've got assets of 200, goodwill of 20, NCI of 66. So we've got a sub. We then have a single overseas investor who owns 15% of the equity. So the NCI is 30%, of which an overseas investor owns 15%. Palace has been approached by that investor with a proposal. This is the proposal. How the proposed purchase of equity. So the proposed purchase is Palace buys their holding for 10 million in 2 years' time. Now, clearly there's loads of numbers so that we can do the numbers. If we're buying shares, maybe it's a step acquisition, or maybe it's a control to control. For me, this is a control to control transaction. And if it's a control to control transaction, I know there's no gain and I know there's no loss. What I know there is also is a difference to equity. So there's a bit of a mind dump going on here. So let me try and formulate this in a proper way. Palace owns 70% of Arden, which is a sub, full stop, when is a sub with an NCI of 30%. The proposal to buy a further 15% is a control to control transaction. It is still a sub, full stop. No gain, no loss will arise in the Palace group accounts, as this is a transaction between group members within group equity. There is a difference. There is a difference that will be taken directly to equity. All right. I've done that in 3 minutes. I've got 3 minutes to go. Let me therefore open up a little bit of a table where I try and calculate the difference. So I am reducing the NCI. So I've got a cash out. I have got the extra investment that I'm using to pay to buy out the NCI. And it's buying them for 10 million. So I'm going to put in there 10. And then I have a reduction in the NCI balance. So whatever the NCI balance was, it's coming down. I am buying 15% of the 30%. If I was buying all of 30%, if I was buying the whole of the NCI balance would disappear. I've got an NCI balance at 66. Is that where we are now? Yes. So what I'm doing here is I'm taking 50 of the 30 and multiplying that by 66, which is therefore 33. I therefore have a difference of, yeah, that's half, isn't it? Yeah. Therefore, I have a difference of 23. And this is a difference that goes direct to equity. And if this goes direct to equity, it's either positive or negative. I've only paid 10. I've only paid 10, and I've got rid of a troublesome NCI balance. So for me, this is a figure which is positive. I am now stopping. I have done this in 6 minutes. I still have 2 minutes up my sleeve. You had 6 minutes. I had 6 minutes. This is not a perfect answer. I want to stop and look at the answer, and it's worth 5 marks. You've seen my answer. How many marks do you think my answer is worth? If you were the marker and you're marking me out of 5, please can you put in the chat box how many marks you think my answer is worth? This answer, exactly as I've produced for you. How many marks? Tell me. Do you think it's worth 1? 5? How do you think it's worth 4? Say 2, 3, 4. Mohammed says it's worth 4. I like you, Mohammed. Oh, someone says it's worth 5. Haha. Stephanie says it's worth 4. Jean Lip says it's worth 4. Yeah. Jing Tan says it's worth 4. Victor says it's worth 3. 3 is 60%. 4 is 80%. It's good, isn't it? It's enough to pass. Maybe I should move on. For what it's worth, I think this is worth probably 4 marks. I think this first statement is worth a mark. I think because we've identified it's not a step acquisition. I mean, if I had a little bit more time, I would say this is not a step acquisition, you know. I think I don't care about the spelling. I think the fact that we've said no gain, no loss will arise is valid, and I've justified it. I've justified it by saying it's a transaction within group equity. So not only have I said there's no gain or no loss, but I've said why there's no gain or no loss. There is a difference to equity that will be taken directly to equity. In some ideal world, I would add there is no change to the goodwill. Yeah, in some ideal world, I would say there is no change to the goodwill as it remains a sum. But I didn't write that, but you know, in another world, I would have written that. If I had another minute, I would have written that. So I think the marks, I'm comfortable what I've done is worth 3 marks in terms of the written work. And because I would see the split, the majority of the split always for the words. So if you've got 5 marks here, 3 marks for the words, 2 marks for the numbers. Now, the format that I've done is correct. One of the numbers is wrong. Which number is wrong? Which number is wrong? I have done a technical mistake. I still think what I've done is worth a mark. That's why I'm giving myself 4 out of 5. But I've put in there a technical mistake. Thank you. Thank you. Thanks, Sam. Why is it wrong? Why is 10 wrong? Why is that number wrong? Thank you. And therefore, we could also write, yeah? And so we've got to discount this by 1.1. Yeah, 1 over, I should say, 1 over 1.1. Yeah, does that work? If I put it there to the power, 1.1 to the power 2. 1.1. Yeah, 1.1 to the power 2. Yeah. And, you know, you can say, oh, it's 10%. So you can say it's 8, or you can say or you can calculate it as 8.264 or whatever it is. And therefore you've got a difference there, which is 25. You know, if you want to make decimal places, you can make decimal places. This answer is now worth 5 out of 5. In fact, potentially this answer is worth 6 out of 5. See, some of the marking is generous. So there may be 4 different things that you can earn the narrative marks for. But as long as you say 3 of them, you get the maximum of 3. And there may be 3 different marks available for the numbers, but so long as you get 2 of them, you get the maximum number. So I do know that sometimes happens in exam questions. You get maxed out. So, you know, a perfect answer in theory is worth 6 out of 5, or 7 out of 5. So you don't need to give a perfect answer. You just need to give what you can give. I'm pausing for a moment. Because I think we ought to take a break. Does the subsequent measurement give an extra mark? Yes, it does. Well, again, okay, look, what's the limiting factor about you passing this exam? I'm demonstrating to you, I think it's time, not knowledge, because you're absolutely right, Adi. We could now talk about the fact there will be an unwinding of the discount in the next accounting period, that you would account for that liability at amortized cost, that the extra investment is a debit, you know. So we could talk here about unwinding, you know, we could talk here about the unwinding, creating a finance cost. You know, we could even do journals if you wanted to, that you've, you know, debited the investment. Yeah, and that you're crediting a liability, that you're reducing the NCI. So we could do an NCI balance and say, you know, it was 66. Yeah, and then less 33 and but do you know what? I'm not doing any of that. It's not within the game. if you had 4 hours, 5 hours, 6 hours to do this exam, you should pass. You really should. I think if you've followed a course of study, if you've worked hard, the difference between you passing and failing is about your exam technique and your moving on rather than your technical knowledge. And those of you who've got good technical knowledge need to be disciplined. I want you to be marked out of 100. I am fed up with reading and understanding that too many students do well on question 1, you know, maybe get 15 out of 25 on question 1, maybe get 15 out of 25 on question 2, get 12 out of 25 on question 3, and then get 2 marks on question 4. 15, 15, 30, 12, 42. Hey, we're good to go. 2 or 3 marks, 45. I cannot tell you the number of students who fall into that trap doing poor time management on their strong areas. Yeah, grab those easy marks, move on. Time management is key. That's why I set you 6 minutes, I set myself 6 minutes to a fresh question you've not seen before. Look, it's 1:45. We are online. I need to stand up. I need to get some fresh air. I need to come back energized so that we can have another fantastic session. So please, stand up. Go and make yourself a cup of tea. That's what I'm going to do. Go and have some water, get some exercise. It is, we're going to, it's at 1:45 now. We're going to come back in 10 minutes time, please. We return at 5 to the hour. All right, let's take a 10-minute break. Thank you very much. All right. Okay, hopefully you're back. Are you back? Can you? How do I know you're back? How do I know that you can hear me? Thank you. Yeah, excellent. You're back. I'm back. Okay, so what we were doing there was we were playing around with the practice platform, and I think it's probably worth doing one more little question from that practice platform. And so let me go into that idea. So you get the idea that I'm revising your technical knowledge, but I'm also trying to get you to answer exam questions so that you can be comfortable with it. So we've got a new scenario, and let's have a look what the requirement of it is. And this is again for 6 marks. And you know, if we take the idea of 6 marks and we multiply it by 1.8, then we're looking at something like 11 minutes. Yeah, so you kind of double it and then just, you know, take away. And this is exactly what I would do in the exam, 11 minutes, something like that. And this is about the purchase of Ramposa. So the information would be here. And I'm thinking it could be a step acquisition, or it could be another control environment. But let's have a look at the information that we've got here. Ballet had purchased, past tense. So this is about a proposed purchase. Proposed purchase, 6 marks. I can see some percentages and numbers, so we've probably got some calculations to do. You had purchased a 40% holding. This is significant influence, and equity accounting was applied. So in other words, what we've got is a 40% associate. What we've already got is a 40% associate. I know that. and you've got a carrying value of 41 million. All right. So you've got an investment in the associate at 41 million. The fair value of it is 60. They're considering, so they bought it for 20. So you've got three numbers there. They bought it for 20, but it has a fair value of 60. Now, what they're doing is they are considering buying another 25%. So if you then buy another 25%, this would then give you 65%. This would then mean it's a sub, and this would then give you an NCI of 35%, I would imagine. The proposed consideration is 55 million in cash and shares. So you're proposing to pay that amount of money. The shares have a nominal value of 20 and a fair value of 25. So you've got there 55 million in cash and some shares. All right, so you've got that going on there. The net assets have been assessed as having a fair value of 23. So we've got net assets at 23, but the net assets at 23 awkwardly are before taking into account the fair value of a contingent liability. So that's a bit of a blast. And the NCI is measured as a proportion of net assets. So what's going through my head? My head is buzzing. So what am I planning here? I'm planning on saying this is a step acquisition. I'm planning on saying that we're going to have to calculate goodwill. Yeah. So, you know, and then we're going to have to, I think, do some numbers. So step acquisition. So the proposed purchase of 25% of extra shares by Palace in Ramaphosa means that Palace will get control. Ram will become a subsidiary that is fully consolidated and equity accounting will cease. So there'll be time apportioned in the P&L. Goodwill of Ramaphosa have to be determined. The previous investment will be revalued to fair value and the gain taken to P&L. Right, the gain taken to the group P&L. Right, we've got the numbers to do, and the numbers is the calculation of the goodwill. And if we're going to calculate goodwill, we've got three ingredients. We've got the investment. Now, in this case, we've got the original investment, and we've got three choices: 20, 41, or 60. Which number should I use? Which number should I use? 20, 41, or 60? What's the figure if I'm calculating goodwill? Yeah, I've got to have all of my investment at fair value. Yeah. All the controlling interest must be at fair value. Yeah, thank you. Thank you, Alif. Thank you, Alif. Maybe, just maybe, the person I might select for the Instagram prize is a name that I recognize because of the engagement that has taken place. So the more you engage, the more I might recognize your name. Thank you, Ali. So that gain, that figure is 60, which is the right figure. And incidentally, as a throwaway comment, the carrying value of this investment is 41. And therefore, there is a gain of 19 that will go to the P&L. But I slightly show off in doing that. So you've then got the cash that is going to be paid, and so there's 55 million in cash and some shares. So the cash that we're paying is 55. We're then also giving some shares as well. Now, the shares that we are giving, help, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. The shares have a nominal value of 20, but a fair value of 25. So we're putting in 25. So let's not get too ahead of ourselves. This is the investment that we've got. 55 and 25 is 70 is 80. So that is a figure there of 140. What we've then got is the idea that we've got our NCI. Now our NCI will be fair value or proportion of net assets. So it's 35% of the net assets. What I don't know is the net assets. So we've got to come up with the net assets. Somebody tell me what the net assets are. What number would you have for the net assets? So I have got 6 minutes on this example. I've almost run out of time. And if I said that the net assets were 23, yeah, if I said the net assets were 23 and I will multiply that by 23, I would be comfortable that this answer is worth 4 or 5 out of 6. I could stop here with a clean conscience, but I've shown you enough to pass in the time allowed. Yeah, I have a clean conscience. This is enough. Yeah, we've identified it as a step acquisition. What I love about my own answer is that it calls it Palace and Ramposa. It picks up, it answers the question. It says that they will get control and that it will become a subsidiary. This is, you know, this is absolutely key. This is worth a mark. It's all about, yeah, this, you know, determining goodwill, yeah, acquisition accounting, that's going to get yourself maybe half a mark. The previous investment will be revalued to fair value. And again, that is definitely what I'll be, certainly as we've got the number. So I do feel we've earned 3 marks here. We've set out the calculation here with the, I'm comfortable. I am comfortable. But what I don't know is the investment. Zahir says 13. Sam says 20. Student says 13. Right. Can we take a time out here? Under ISA 37, the individual company of Ramposa is correct. If somebody is suing you for 10 million, Ramposa is being sued for 10 million, but it's judged there is only a 30% possibility that Ramposa will lose the case. Now, for me, Ramposa, as an individual company, 100% correct in what it's done. it's disclosed it in the notes. Only if it's probable should Ramaphosa recognize it. So let's put it in a box. Ramaphosa is correct, and Ramaphosa has got a figure of 23 million, but this is before taking into account the fair value of a contingent liability. I'm Palace. I'm looking at the net assets of Ramaphosa. I'm not applying ISA 37. I'm applying IFRS 3. I'm applying fair value criteria. I've got to make a judgment as to what the fair value of its assets and liabilities are. And now maybe here's a little bit of a leap, but the fair value is the market value. The fair value is the amount you would expect to receive if you were to sell an asset or pay to get rid of a liability. If you've got a 30% chance of having to lose 10 million, it seems commercially logical that you would pay an insurance, you would pay an indemnity, you would pay 3 million to get rid of that court case. You would settle at 3 million. So the fair value of that 10 million is 3 million. And if we recognize that additional liability, that means that our net assets are only 20. Sam got the answer right. Well done, Sam. Yeah. Wayman got the answer right. I like it. Yeah, I like it. So it's 35% of 20, which is therefore 7. And those of you who are obsessed with the maths, you can do the maths. The goodwill in this context is 127. But what would be better is to say fair value of the contingent liability has been assessed at its expected value, 30% times 10 equals 3. An extra liability reduces the net assets. Time is the killer. Time is the killer. Time is the limiting factor. Time is the issue. So I'm just pausing for a second. Are there any questions? So I've sort of dealt with group accounts in a way which I'm hoping is showing you that it's written, showing you that you can do these questions. They're not impossible. It's showing you quite aggressively about the time management. Good. Okay. Let me go back to a new screen share. And let me go back to resume effectively where we were in terms of the presentation. So let me just carry on down. Right. Okay. So I wanted to flag up to you the some of the resources that are available. Now you're doing SBR. One of the things that can help you revise to SBR, oh, look at that. I'm wearing the same shirt today as in that picture, is to find my podcast. And my podcast is available on Spotify. It's available on Google. It's available on Apple. It's available on wherever you listen to your podcast. And if you don't listen to podcasts, just go onto Google search engines and put in Clendon, SBR podcast. And you'll find a link and you'll be able to listen to a series of short bite-sized chunks. Has anybody already listened to any of my podcasts? Yeah, has anyone, can you put in the chat if you have, and have you found them useful? Heng, thank you. Yeah, you'd recommend them to other students who hadn't yet seen them. Amira, thank you. Yeah, great, fantastic. So some of you have clued in there. Some of you have already started to access these resources that I have out there. I have free resources out there to help students. And the podcast is a useful one. So if you're not familiar with it, please make yourself familiar with it, because there's a lot that you can gain from it. Group accounts comes up in the exam. Ethics comes up in the exam. Now, if we're going to get good quality financial reporting, we need to have proper regulation, but we also need to have people who implement that regulation to be ethical. I'm going to spend 5 minutes very quickly running through your revision knowledge of ethics before we have a look at a question. Yeah, before we have a look at a question. So we are professionals, and that in itself means that we have to use judgment, that we have to act in the public interest. The regulatory system that we have is principles based. So we're looking at measuring profit as an art rather than a science. There's always an application that is required when we're preparing financial statements. Is it possible? Is it probable? And that must be applied in an ethical way. Now, there are 5 ethical pillars. You will never be asked what are the 5 ethical pillars. You'll never be asked to repeat the 5 ethical pillars, but you will have to apply them in a very practical situation. So this is not about rote learning. This is about interpretation. What do you interpret the picture on the right to be? What are you seeing on the right? What is that a picture of? What animal do you see when you look at the picture? Hey, some say duck. If you look from right to left, you see a duck. But if you look the other way, you can see a rabbit. Sometimes there's no one right answer. Sometimes it's a matter of judgment and how you see things. And you can get marks for saying it's a duck, and you can get marks for saying it's a rabbit. It's both a duck and a rabbit. And sometimes ethical situations need more than one answer, need you to look again at a second time. And hopefully now you look at it from left to right and right to left. Hopefully you can now see in the round that it is both a duck and a rabbit. That eye, that dot in the middle. Yeah, are they ears or is that a beak? So the 5 ethical pillars are objectivity. You've got to be independent. Yeah, that is compromised when you're wanting a bonus. You cannot be objective if you're auditing your brother's or your sister's business. You've got to be able to walk away. Objectivity. Competence. You've got to know what you're doing. I'm an ACCA member, but I don't do my own tax return. I've lost that skill. So I get a friend of mine who's another ACCA member who is up to date with tax, and he does my tax return for me. So take on what you are professionally competent to do. Make mistakes, and that's not very good. That's unethical to make mistakes. We've got to show due care and attention, professional competence, professional behavior, don't swear. Professional behavior, answer your emails. Professional behavior, be polite. Don't bully. Don't bribe. Yeah, don't bully, don't bribe. Be honest. And honesty is not just about creative accounting. In a recent exam, there was a question mark over the business model of overcharging customers, of exploiting vulnerable members of society, of charging them money lending type of punitive rates of interest. So integrity can be not just about showing the accounts to be true and fair, but operating in a business model. You wouldn't want to work for a thief. You wouldn't want to do the accounts of a robber. And these days, of course, thieving and robbing can be done in subtle ways, you know. Confidentiality, again, confidentiality is a key issue. Confidentiality is a key issue for integrity. We as accountants will come across situations and we shouldn't look to personally gain from them. We should not pass on our client information, just like your doctor. If you've got a mix of accounting and ethical issues, try and think about your accounting issues first. Be aware of the existence of related parties, because often in ethical issues, there's a related party going on there. Any accounting treatment that is proposed is normally wrong. Yeah. And competence and integrity are the two easiest ones and the two normal ones to come up. We'll look at something that's a bit odd in a minute. So that's the basic approach. That's a bicycle. We've broken it down into its constituent parts. And that's what you've got to do in a question. You've got to break things down into their constituent parts. Yeah. If there's a dispute going on, that's okay. To be honest, it's unusual in your career if you don't come across arguments. And arguments are okay. It's okay to have an argument. It's okay to have a disagreement if you're polite, if it's not personal, if it's about the issue. If both of you are professional, you can have an exchange of views. And sometimes, because it's, you know, who do you think's going to win the Premiership today? Is it going to be Man City? Is it going to be Liverpool? It's an opinion. Yeah, who's the better team? Is it Liverpool? Is it Man City? It's an opinion, you know? And if you're professional about it, you can have a discussion about it. And then you say, well, actually, we'll find out tomorrow, you know, who has won the Premiership. I said you shouldn't bribe, and I said you shouldn't bully. The word bribe is never going to be in the question. It's going to be more subtle than that. You'll get promotion. If you turned a blind eye to my behavior, if you just sign off this cash flow budget and send it to the bank manager, even though we know we've just lost our biggest customer, so we're going to be in some difficulty, but don't include that in the cash flow projection, because I'm sure we'll get another one. Just sign this off, send it to the bank manager so we can get a new loan. And if you do that, I'll give you a promotion, I'll give you a pay rise. That's a bribe. Yeah, that's giving you a reward for unethical, and the person who's doing it is unethical in their actions, and we would be unethical if we use that, if we took that information on board. We need to talk to someone about that. It's just not professional. Because if you don't do it, you're going to get sacked. If you don't do it, I'm not going to renew your promotion. If you don't do it, everyone else is going to get a bonus, but you're not. That's also unprofessional. And as a student, as a junior member of staff, as a newly qualified, we've got to have the balls, we've got to have the courage, we've got to have the maturity in the exam to stand up and say, hang on a minute, this is unprofessional behavior, and I'm going to do something about it. Because if you go to a doctor, the doctor will diagnose the problem. The doctor will listen to your chest, take your heart rate, take your temperature, will diagnose you and say, you've got this wrong with you. And if you're answering an ethical question and all you're saying is, this is unethical, this is wrong, this is unethical, that's an incomplete consultation. That's an incomplete answer. When you go to the doctor is going to conclude by saying, here's a prescription, take these drugs twice a day. I'm going to submit you into hospital because you need an operation, or you're just a bit overweight and you need to change your diet. Come on, get a grip. The doctor gives you action points. Once they've made their diagnosis, they say, this is life. And if you want to get better, if you want to stop having night sweats, if you want to stop having headaches, you've got to drink more water, you've got to do something. So we in the exam should end our ethical answer with a call to arms. And if there's a dispute or you're not sure, one clear thing to do is to tell the person who's in the conflict not to breach confidentiality, but to seek out an appropriate person to help them. A non-executive director, an audit partner, yeah, the ACCA, a lawyer, who will then preserve the confidentiality of the situation. Resignation is a last resort. Resignation is a last resort. Let's have a look at a question, shall we? So we've done the theory. Yeah, we've done the theory. Let's have a look at another question. Let's go back to where we were. And we were on test reach. And we were looking at this question, and now we're moving on to another question. You know, this is fresh. This is a challenge. This requires you to do some reading. Priya, the newly qualified ACCA member, so she should know her ethics, but she's in a junior position. The MIA group is a group of companies, and David is the finance director. And we have got the following exhibits on the left-hand side: sale and lease back, transactions between MIA and Pully, don't know who Pully is, customer database, use the information. The information should be used to answer the question within the response option provided. I don't care whether in the exam you do question 2 first or question 4 first. I don't care which order you do the questions. I do care that when you're doing a question, you're doing the question in order. So you're doing the question part A first, part B second, and part C, because sometimes within the question builds. Somebody raised a hand. If they want to put something in the chat box, put it in the chat box, or if it's a general question, wait. Yeah, or maybe they press the hand by mistake. So it doesn't matter the order you do the questions, but it does matter within the question, the order that you do the information. You should do requirement A first, then B, then C. You should follow the order, because sometimes questions build, particularly on the ethical side. Requirement, control, copy C, close the requirement off, end of requirement, word processor response, control V, open it up. Yeah, open it up, and we have got a 4 marker. What's the correct accounting treatment? We've got a 4 marker. What's the correct accounting treatment? And then we've got buckets of marks for ethics. So we've got 4 marks, yeah, in relation to sale and leaseback. We've got 4 marks in respect of sale and leaseback. So we've got something like 7 minutes in theory that we would have on that. Yeah, but the majority of the marks, yeah, the majority of the time is going to be effectively here on our ethical side, which is 18 minutes. Yeah. Now you've got professional marks for the quality of the discussion, and those professional marks, you're just going to earn them. If you do a good answer, you will naturally earn those marks. Those marks are going to be particularly earned for action points. You particularly get ethical marks for action points and for linking to the pillar, yeah, and for it being a rounded answer. So there's a great deal of judgment involved there. But we've got to think about this first part of this question, and the first part of this question revolves around explaining the correct accounting treatment for the sale and leaseback of the factory building. The question will be wrong. The question will be wrong. Just prior to the reporting date, Mia sold a factory to a third party for 50 million. The asset is in the books at 40. We then lease it back for 60 years, which is the same as a useful economic life. Ownership of the asset comes back to Mia at the end of the lease term. The present value of the annual lease payments is 50 million. We'll pay back 50 million. In respect of the transaction, the finance director has instructed Priya. David is an ACCA member. Priya is an ACCA member. David is Priya's boss and has instructed Mia to de-recognize the asset and show a profit of 10. Explain the correct accounting treatment. Buzzwords, structure. What buzzwords, what structure are you going to give me in your answer? How are you going to start this? Can you put some buzzwords in your chat? Can you put 1 word, 2 words that you think can be the basis of a mark? You've read the question. We need to do this fairly quickly. The suggestion is there's no sale. The suggestion is not sale and leaseback. So what is it then? What is it? It's not a sale. Thank you, Nash. Yeah, thank you, Nash. This is a loan. Yeah, thank you, Nash. This is a loan. So we've got to talk about the faithful representation. We've got to talk about the faithful representation. We've got to talk about whether or not there is a performance obligation. And there is none. Because we never deliver the asset. This is a loan. Now, I'm not saying that this is my final answer. I'm saying this is my plan, my structure, and I can then develop each of those points. Yeah. So the faithful representation might be there are two different ways of accounting for a sale and leaseback, full stop. It's necessary to do a faithful representation, full stop. New paragraph. We need to identify whether or not there is a performance obligation, full stop. MIA has no performance obligation to deliver the asset to the third party. It's leasing it back for the whole of its life. It's leasing it back for the whole of its life. Yeah, for 60 out of the 60 years. And you get title back. The truth is, the substance is this is a loan. To explain the correct accounting treatment, this is a loan. Yeah, there's no profit. Try and say 4 things. Try and use the name MIA. MIA hasn't got a performance obligation. Okay, I'm happy to move on. I'm not going to type up that answer. Yeah, are there any questions on that sale and lease back? Talk to me quickly if there is. Explain the correct accounting treatment and disclosures arising from the transactions between MIA and Pulley. Parent company MIA owns 80% of the equity shares of Pulley. Pulley normally sells goods to third parties at markup of cost plus 40%. During the current period, MIA has bought a large amount of goods from Pulley at a 50% discount on the normal price. Some of these goods remain. Korea has expressed concern regarding the sale of goods by Pulley to MIA as they're not at the usual price. Priya is concerned about the ethics of this and considers that details of these transactions should be disclosed. David, the finance director, says no ethical issues arise because the transaction will be eliminated from the consolidated financial statements. David has told Priya not to make any disclosures or reference these transactions when preparing MIA and Pulley's separate financial statements. What's the accounting issue? What's the correct accounting treatment here and disclosures? What's going on? What accounting standard jumps out at you? Nash talks about unrealized profit. Yeah, good. I'm happy to. Yeah, again, I'm just looking at a plan. Yeah, related party transaction has to be disclosed. Yeah. So, you know, parent and sub are related parties. So disclosure in the individual accounts. Now, can we take a time out here for a second? The transactions that are taking place between the parent and the sub, the disclosures for related parties will be in the accounts of the parent and will be in the accounts of the sub. They have to be. So David is wrong in telling Priya not to make any disclosures or references to these transactions when preparing the Mia and Pulley separate accounts. Just David is wrong. In the group accounts, David is actually right in that in the group accounts, the transaction will be eliminated. So I'm comfortable that the transaction will be eliminated in the consolidated financial statements. So that is correct. You know, that is correct. Yeah, that's an okay thing to do. Now, I want to move on in a minute, but talk to me about the unrealized profit. You see, what I'm thinking is this, that we normally sell goods at a markup on cost of 40%. And then the sale is taking place at a 50% discount. So if the cost is 100, you would add on 40 to give you a normal set. I just made up the 100, just made up the 100 because it's like, it saves my head. So the normal selling price is 140, but we less the 50%. So we are selling the transfer price is 70. So the cost is 100, but the transfer selling price is 70. So I don't know if you've ever come across this before. It's making my head hurt. I don't think there's an unrealized profit. I don't think there's an unrealized profit. I think there's an unrealized loss. Because Mia is buying the goods for 70. Mia is buying the goods. Mia buys the goods at less than cost. Mia, the parent, buys the goods less from cost. Is that okay? Are you happy with that? Mia's the parent. And maybe I'm dwelling on this. Maybe I'm now moving into another area. But if I'm going to comment on the ethics of a transaction, if I'm going to comment on the ethics of a business model later on, I need to understand the truth and the substance. If you're pulley, you're being bullied, aren't you? If you're the individual company of pulley, you've got goods at 100, you have to sell it to your parent for 70, you're making a loss. Now, you can say it doesn't really matter because Mia owns 80%. Oh, Mia doesn't own all of you, does it? The non-controlling interest in pulley, I think, is being disadvantaged here. I really do. Yeah, I really do. Right, okay, yeah, so we're eliminating an unrealized loss effectively, rather than eliminating an unrealized profit. And that's kind of the fourth mark. That's kind of the weirdness. But I think that's a relevant thing to take into account. So what we've got here is some ethics issues to think about. And we've got a bit of a story potentially around the customer database. So let me leave you for a minute or two to read about Natasha, to read about the customer database. Just another moment to enable you just to read it. So the requirement, discuss the ethical issues arising in respect to the accounting treatment for sale and leaseback and transactions between pulley and Mia, full stop. So to me, that's a separate issue. Then we've got to discuss the ethical issues arising from Natasha's behavior. So that is a separate issue. And then we've got to have a advise prior on an appropriate course of action. Now, it's not entirely clear to me whether we should do that as we go along or whether we do that at the end. Probably do that at the end. So what we've got is we're breaking down the requirement. There are 3 separate requirements. Now, discuss the ethical issues arising from the accounting treatment of the sale and leaseback and the transactions between pulley and Mia. I don't want to talk about the sale and leaseback and then talk about the transactions. I want to base my answer around the ethical pillar. And therefore, I see an issue of competence. Yeah. There are errors by David. Yeah, it's a loan and it's a related party transaction. Yeah, I see errors of integrity. I think it's about maximizing profit and hiding, related party transactions. And I think this is deliberate, or it could be deliberate, and therefore this is a serious breach. I see there's an issue over the transfer pricing, that there are losses in the sub, and the 20% NCI is being defrauded, is being disadvantaged. It's if you're going to share out profits, you should do so to all of the shareholders. You shouldn't. It's false. It's unethical. So I see here issues around competence. I see issues here around integrity. These would need to be developed slightly. This is an answer plan. This is what I'm doing here. This is an answer plan. Yeah, I'm aware of the time. I'm just getting to the nub of it. In respect of the database, what have we got going on here? Natasha is the chief executive's young niece. So Natasha is a young woman. She's been appointed to a senior position, and she is responsible for the data protection policy, despite having no prior experience. Priya has observed that email addresses and details of customers are not stored in a secured way. Natasha has boasted that she's already taken a copy of the database for her own use. Priya has reported her conversation to David because David's her line manager. So she reports this, and David said David was neither shocked nor surprised. I'm shocked. David has told Priya not to interfere in family matters. Doesn't sound a healthy culture. And it wasn't theft. Yeah, but it is theft, isn't it? It is theft. Discuss the ethical issues arising from it. I mean, there's lots of ethical issues arising from here. There's behavior. There's behavior in that Natasha, should not steal. Shouldn't steal the just because it's not recognized as an asset doesn't mean to say it's valuable. David shouldn't turn a blind eye. Yeah, David shouldn't ignore the situation, and there needs to be proper data control. There needs to be proper security over data, over personal data. And to me, I suppose that one falls under confidentiality. Yeah. So we've got a right old mess. We've got a whole range of, I mean, you could even bring independence somehow into it as well if you really, at a push, and if we've got to advise Priya on the appropriate course of action, she's really stuffed because she's already gone to a boss who's ignored her. Her boss's boss, or this young niece, is clearly not the person to be a receptive ear. The chief executive probably won't want to hear bad news about his niece. So I don't know. I would take legal advice. I think it's. I would take legal advice. there is probably no one internal who, there's no one internal that's obvious that can be the appropriate sounding board. This may be a situation where you need to consider resignation. And so it is about creating an answer that is structured. Yeah. And, you know, my answer that I'm giving you here is of an answer plan type. And you've got 18 minutes, you've got 20 minutes to take these ideas and write proper sentences. Yeah, you would need proper sentences in order to develop these points. Yeah, in order to develop these points. I'm pausing for a moment. Is that okay? Are we comfortable with this? Are there any questions arising on these ethics questions? If it's an accounting treatment, it's going to be wrong. If it's an incorrect accounting treatment, that's lack of competence. Yeah. If it's a deliberate mistake, so you've overstated profit, hidden related party transactions, hidden liabilities, it's probably deliberate, creative accounting, lack of integrity. We've got a responsibility to show to our shareholders a true and fair view. But ethics can also come up in a non-accounting environment: bullying, bribing, exploiting customers, poor business model, nepotism, yeah, not protecting the company's assets, and assets in a general sense here. Data needs to be protected. Yeah, you know, in many parts of the world, there's a GDPR, you know, there's government regulation as to how we handle customer data. It in a data world, you know, businesses need to respect the financial, the information of our customers that we're gathering, so that they are behind firewalls and they are secure. And if we are part of an organization where we know the systems are weak and the systems are vulnerable to attack, that's an ethical issue. It's an ethical issue. And we've got to flag it up. I'm sorry, but as a professional, as an ethical accountant, we cannot be blind. We cannot turn a blind eye. We cannot be dumb. We've got to speak up. Otherwise, yeah, you're as bad as the bully, you're as bad as the briber, you're as bad as the person who allows those things to occur. Now, in reality, of course, these things may be very difficult in a cultural scenario, may be very, very challenging. I'm not saying it's easy. What I'm saying is, in the exam, it is easy to say, I would consider resignation. Yeah, Priya should consider resignation. It's an easy thing to say. In reality, it's quite a tough thing to do, to leave your job, yeah, on ethical principles. But people do, people have done, and arguably that is the right thing to do. But, you know, take advice, take legal advice, professional advice. I'm pausing, I'm moving on, I'm pausing, I'm moving on. Going. Right. So we've done some stuff on ethics. We've done some stuff on group accounts. We've had a look at some questions, and there's really two more things that I want to do with you today. I want to talk to you about a particular current issue that I had a meeting with the examiner back end of last year, and he made various promises. He made various promises, and he promised that he would examine time and time again sustainability reporting. Now, it wasn't in the last exam. Wasn't in the March exam. Has been tested, but what he was talking about was the future. You see, accountants are uniquely positioned because our role is communication about the performance of the business. We measure and we report. Traditionally, we measure on money in, money out, and we summarize that information that we've measured into P&L, balance sheet, cash flow. But performance can also be thought about in terms of sustainability, carbon emissions. And just like we talk about our business model in our integrated reports, we could also produce sustainability reports. Sustainability is a massive issue. You know, rising sea levels is a massive issue. And investors want information around the sustainability of businesses and whether they are green or whether they're not green. So one of the things I've done as an individual, I have a fairly low carbon footprint. I teach students online. Therefore, there's no classroom to heat. There's no journey that you've had to take to get to the class. And there's no trees that have been chopped down to hand out the handouts. So actually, by doing an online class, it's very green, it's very environmentally sound, but there is still some carbon emissions, using electricity, using the internet. Therefore, what I've done on a personal level is to become carbon neutral, and that's what I do. Yeah, I make a contribution, and I make sure that trees are planted. So some different business models will have a different impact on the environment. If you're a palm olive company, if you're an oil company, if you're a gas company, if you're an extraction company, potentially if you're an airline, potentially your activities are less sustainable, perhaps, than if you're a farmer growing crops as opposed to a farmer farming cows. So this is something that we know as a generation, and this is something that affects us as professional accountants. So the idea of sustainability is that we leave the world in a better place, or as good a place as we find it. So we've got to think there about the extraction of minerals and resources. Are we compromising our future? So sustainability isn't always going to happen tomorrow, isn't always going to happen today. It may be something that we are working towards. A lot of the oil companies, for example, are talking about 2040, 2050. In the UK, the government has passed legislation that in 20 years' time, there will be no petrol cars. That's massive for the car manufacturing industry. They're going to have to plow millions of pounds, billions of pounds into switching their production lines away from manufacturing petrol and diesel cars and into the technology around electric cars, and then providing the appropriate. So although we're imposing a cost on the car industry, there's also an opportunity, for people who are clever at batteries, people who are clever at delivering the electricity. How does that work? Creation of meters. So sustainability will curtail some types of business activity, but encourage other types of business activity. Now, there's a narrow question here about regulation. Should we have sustainability reporting? Should it be regulated? Because we've got regulation over the P&L and the balance sheet and the format and revenue and financial instruments and impairment. We've got accounting standards on how we prepare our financial statements. Should we have accounting standards on sustainability reports? Well, arguably no, because if you don't have regulation, then you feel the market will come up with the best solution. If you have no regulation, you allow innovation. You allow bespoke reports to be created. Maybe that's a bit naive, because if you don't have regulation, I agree. That's a very valid point. Yeah. So you've just said that to the hosts and panelists. Let me read that out. In my opinion, we should not have regulation because it would just be a checklist, yeah, to comply with. So there's a passionate argument. There's a valid point to be made there. I agree with that. But if you have no regulation, then you don't have comparability. You have a vacuum, and arguably there's an urgency, there's a crisis. The advantage of regulation is that everybody would then do it. You'd have to comply with it. There would have to be comparability. And as has just been said, the disadvantage of regulation is that it becomes a tick box approach, a checklist mark, tick box approach, yeah, and is imposing cost onto businesses. I don't have an absolute right, and I don't have an absolute wrong answer. I'm merely saying there is a debate around whether sustainability reports should be regulated. I think my personal opinion is that it should be. Yeah, I think my personal opinion is that it should be. And there is actually, but it's not examinable, there has been a creation of a regulatory board to produce some guidance, and that'll be examinable from next time onwards, but not for this time. The situation at the moment without regulation is unsatisfactory. If we had a mature, well-developed, principles-based set of accounting standards, it would encourage sustainability reporting. It would require sustainability reporting, which would become more transparent. It would be helpful to investors. Blah, 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 blah. That's my conclusion. Principles-based, yeah. Because if you think about an oil company, they have a very different environmental footprint and risk profile to an online lecturer like me. So it is very difficult to create regulation, detailed regulation, because one size doesn't always fit all. This is a debate. Different. In exams, you often have a scenario where we're linking to a particular user. Why do investors want sustainability reports? Because they do. Because there is a reporting gap. There's information that they want, which isn't included in the accounts. They want to know about the future. They want to know whether you're green or not. And so investors want this information, and we need to give it to them. Because if we're going to invest in a company which then is doing an activity which is now becoming illegal, or is legislation prevents that happening, or we get fined or costs imposed upon us, I want to invest with my eyes open. If I'm going to buy shares in a car company or an oil company, I need to understand the changes in the business model that is going to happen over the next 10, 20, 30 years. You know, a lot of investments are pension funds, and they're not investing for next year's profit. They're investing for a generation. So it de-risks the investment. If you give people information, it de-risks the investment. From the company's point of view, there are benefits to sustainability reporting. This is benefits from the company. Why does the company benefit? Because if they've got more investors, yeah, it will lower their cost of capital. It makes the shares more attractive to buy. Staff arguably don't want to be associated with dirty companies, illegal logging, yeah, pollution. So it's difficult to get the right talent to work for your company. It's easier if you've got a reputation for being a green company to attract and retain the staff. Governments in the future, ethical companies in the future will want their supply chain also to be ethical and green and sustainable. You know, if you're selling clothes, you don't want them made by child labor. If you're selling a product, you want the packaging, if you're to be recyclable, you don't want plastic to be involved. And so you have to pass those values down the supply chain. It's a precondition of winning customer contracts. Investors want this, they get benefits. Please excuse me. Yeah, so there are benefits. That's the point. That's the point. There are benefits to actually producing these reports, but you've got to answer the question that you're faced with. The question might be about, should we have regulation? The question should be about who benefits. You know, what benefits are there from the employer, from the company, or from the investor? Or the question might be around challenges, because there are challenges. Yeah, what form should it take? What's the contents? Yeah, are we going to fall into the trap of boilerplating? Are we going to fall into the trap of TMI? TMI? Anybody know what TMI stands for? Tell me in the chat, TMI. Is it just me? Okay, La, come on. Oh, yeah. Okay, La. Too much information. Fantastic. Yeah. So if we're overburdening our investors with too much information, it gets lost. It's not a good thing. It's not a good thing. It's not a good thing at all to give them too much information. They can't then distinguish. Boilerplating is a bad thing. Boilerplating is cut and pasting. Boilerplating is where you take standard, boring information that you've just picked up on the internet as a policy, drop it in, and it's not really bespoke. It's not really focused on what you're doing. And greenwashing, that's another risk, greenwashing. you know, if you're raising expectations that what you're doing is good for the environment. But if you're doing it as a cynical PR exercise, it's going to come back and bite you. You've got to actually embrace the ethical issues around sustainability and alter your cultural behavior. You can't just have a report which says we're nice people. You've actually got to be nice people. You've got to change your company fleet away from petrol engines to electric engines. You've got to get your factories, and you've got to install solar panels on your factories. You've actually got to stop using plastic. You've got to implement your policies. If all you do is a PR exercise and you just have a fancy advert and a glossy report, but underneath you're still burning coal, you're still chopping down forests, you're still exploiting child labor, then you're greenwashing, and it's worse. You may as well just quietly get on with being a bad company rather than pretend that you're something else. So the report should not be a top down. It should be, if you like, reflecting bottom up. What information do users want? What's the strategy? How are you monitoring the goals and the targets? How do you measure carbon emissions? What's most relevant to the business model? Got to be bespoke. And it's possible the examiner could, give you a scenario, give you a company to comment on, an industry to comment on. And I've mentioned various ones in my, because if you're involved in batteries, if you're involved in developing a replacement for plastic, these are tremendous business opportunities. So what's the potential effect on the company's profitability of different climate scenarios? If you're involved in installing solar panels, wind farms, insulating housing, these things are boom industries. Is your business model viable? Are you going to have to write off your production line because your production line is making electric cars? Have you got a estimated useful life that goes beyond the government's policy? The government has introduced a policy that in 10 years' time, no petrol cars can be produced. Our policy is to write off our plant and machinery over 20 years. We're a car manufacturing company. We've got to review that. There's an impairment potentially going on in respect of our assets if they're dirty assets, in inverted commas. I don't know exactly what the question is going to be. I just know that in the coming diets, sustainability reporting will be tested. And you can't be asked to write one. And you can't be asked really to interpret or comment on one too much. So we're talking about it rather than actually doing it. Let's talk about now. And let's talk about what you're going to do between now and the exam. You're going to keep going. You are going to keep going. You're not going to give up. You've come too far to give up. You've come too far. It's going to be tough. The exam is tough, but I hope so are you. time management, time management. Do mock exams to time, time management. Move on. Don't be a perfectionist. Don't be Google. Answer the questions. Use the skills and the confidence that you've had to get this far. Make sure you apply them in an SBR scenario. Kiss. Kiss. Yeah. Keep it simple. 1 mark at a time. Don't overcomplicate your answers. You haven't got the time. You've got to answer question. This is question after question. This is not a thesis. Spelling mistakes are allowed. It's not a test of your English grammar either. Write in proper sentences, but leave gaps, leave white space. The examiner's answers are not what you are aspiring to reproduce in the exam. You are not capable, I am not capable of producing a quality of the examiner's answer in the exam. No way. It's not what you need to pass. If you try and produce the examiner's answer in the exam, you'll fail because you'll run out of time. You don't quote the name and number of the accounting standard. You just don't. No marks in the marking guide for doing so. Please, kiss, kiss. If you think you're going to fail this exam, it's probably true. If you think you're going to pass this exam, it's probably true. The game is played up here. Tennis matches, boxing matches, football matches. They're all professionals. It's the mental strength, right? You've put weeks and months and hours of work into this. And you've just got to believe that you can pass this exam. You've got to be positive about it. Yeah, realistic, but positive. You've given up 3 hours of your Sunday. Thank you. I do thank you. You're the good students. ACCA have provided these additional resources for you. I'm sure there will be an opportunity to feed back to ACCA. Let them thank them. Because if nobody feeds back, if nobody thanks them, maybe they won't do it next time. If you found this session useful, thank the ACCA in the feedback. Ask for more. They are there to help us. They are there to help you as students and me as a member for the furtherance of the profession. The next couple of weeks are going to be tough. Ratchet up the pace. That's a sponge. And your brain is a sponge. When you're in the tuition phase, you're absorbing information, you're learning definitions, you're looking at financial instruments, you're looking at group accounts, you're looking at leases, you're learning more and more and more and more and more and more and more. And that sponge gets fuller of water, fuller of knowledge. I don't think you can take much more on. I think between now and the exam, you want to be squeezing the sponge. The exam is not a test of how much you know, it's how much you can apply. It's your ability to get your knowledge out of your head and down to answer the question. It's that quickness of recall. It's that application that matters. It's not a question of going back to the books and learning more. It's about doing mock exams. It's about practicing questions to time, getting feedback. Please, please. Do you enjoy doing exams? There's Usain Bolt. Look at the guy who's fourth. He's trying really hard, isn't he? Whereas Usain Bolt, in a strange way, doesn't look like he's trying. He's relaxed. Do you think it's possible to be relaxed in the exam? It would be ideal, wouldn't it? Yeah, those footballers at Anfield, those footballers, they win when they play at home. You need to pass this exam for your career because you put the time in, because it fulfills your potential. The best way of doing that is, if you can on the day, to be relaxed, knowing that you've worked hard, not the night before. Night before was an early bike, please. I've talked about my podcast. Many of you have found it. Thank you. And I've talked about my lucky dip. 90% of you have got Instagram. Why not follow me on Instagram? I'll be putting up some tips and tricks, but I will also, when I get off this call, have a cup of tea, I will also be posting up a post where I will be inviting you to go for a lucky dip draw for a free mock exam. So you have to be in it to win it. So if you have not done so already, when you get off this call, find me on Instagram. You can find me on LinkedIn too. Maybe you already follow me on LinkedIn, I don't know. But on Instagram, I will be doing a special Instagram free draw. I'll also be doing an Instagram live next weekend, but that's another story. We've been going now for nearly 3 hours, and I did say towards the end, I would allow any questions and answers. And I've already got one question in. Is it necessary for us to write IAS or IFRS before applying the standards in a particular question? And the answer to that question is no. Yeah, there are no marks for quoting the name or number of the standard. So if you want to use the chat, you are more than welcome to use the chat. May I ask where we can watch a recording of the webinar? You will be emailed, I am sure, a link to a recording of the webinar. So anyone who has registered for this with ACCA, with the local office of ACCA, will be messaged with a recording of the webinar. That's fine. Are there any questions on any aspects of SBR, whether they're to do with study tips or technical questions? Now's an opportunity. Do we get any marks when quoting the principles of the standard? Yes, you do. Yeah, but don't memory dump. Yeah, don't memory dump. What you've got to do is to make sure that you apply. Yeah. You saw, I hope, in the way that I wrote my answers, I was using the company's name. Yeah, I was applying the company's name. Which current issue do you think is important and may come out? Oh, I don't know that. I don't know that. I suppose if you want a single tip, it's sustainability reporting. But the examiner's been quite innovative and a little bit repetitive on things like cryptocurrencies and even things like COVID and, you know, disasters and stuff. And sometimes current issues come up in a slightly oblique way in terms of criticisms of accounting standards. But in answer to your question, sustainability reporting would be my hottest tip for current issues. Bear with me a moment. I'm just trying to find something I can share with you that I think you might find useful. Never mind. Never mind. How do we account for a change in the current service cost after a plan amendment? Charge it to the P&L or OCI? My default on that would be to charge it to the P&L. My default on that would be to charge it to the P&L. That's the basic approach. Right, I'm going to count to 10. And unless there's a question in the next 10 seconds, I will happily move on. So I've been asked whether or not we need to delete the requirements of the question from our answer. It just takes time to delete it. And yeah, as a marker, it doesn't bother me that I know it's the requirement. So it's fine. The markers will be fine with it. You don't need to spend the time deleting it. Are there any less important standards we can ignore for the exam? Certainly that is the case. I mean, with the benefit of hindsight, there'll be certain standards that don't get tested. So they're the ones to ignore. I'm teasing you. I don't know what, with the benefit of hindsight, when you've done an exam, there'll be so much knowledge that you've not been tested. But that's just the way it is. I don't, you know, not all standards are equal. I mean, I think things like you certainly don't learn to calculate EPS. Don't worry about the calculation of EPS and diluted and all that kind of stuff. Don't worry about that. I think it's useful for you to be aware of the impact of accounting treatment on the measurement of profit, on the measurement of cash flow, so you can explain that. And I think you've got to look at each accounting standard and be prepared to write something about it for 1 or 2 marks. So I'm not going to flag up particular accounting standards that you can just ignore because of the complex integrated nature of the exam. I enjoy doing these sessions. I really do. I'm very, very grateful for ACCA that they ask me to do these on your behalf. We're coming to the end. How frequently to ISA 19? I'm just going to write there regularly. There's no pattern when you're doing the exam. Some of you will do the exam in the morning, some of you will do the exam in the afternoon. And you know what? You could be doing a different exam. So it's really, and I don't see all of those exams. So it's really, I don't think you can set up a pattern. Oh, cash flow came up last time, it's not coming up this time. That's not the case. You can't say that. Yeah. So financial instruments clearly is an enormous topic that you must know. What's the difference between section A and section B? Well, have a look for yourself. Get familiar with the exam, because there is a difference. Because in section A, you're always going to get groups and ethics. And in section B, you're going to get lots on IFRS. And often they're set in the context of a particular question. IFRS can be anywhere. And in fact, you could have bits of groups appearing in section B. So there's not a great difference, and it's all compulsory. I mean, I don't know why they have section A and section B. If I was in charge, I would just have one exam. I wouldn't call it section A, I wouldn't call it section B. It's 4 questions, you know. You've got, this is a live experience. This is a live experience. So the idea is that you're benefiting from this live, and effectively the answer to that question is no. You've got a copy of the recording that will be sent to you, so you can watch it again. I look forward to the Instagram live that I'll be doing between now and the exam. I look forward to your comments on my SBR Instagram account. I thank the ACCA for inviting me to do this. And if you have found this useful, please, yeah, why not comment on social media? If you're on LinkedIn, yeah, and we're connected on LinkedIn and you've enjoyed the session, please put a thank you up on LinkedIn and tag me. That would mean something to me. That would be nice for you to do. I would appreciate that, and we can then further engage. So if you have any further questions, let's take them onto social media, onto LinkedIn, onto Instagram. But for now, I thank you very much for giving up your time. That's most appreciated. And I wish you all the best of luck in the exam, but don't rely on luck. Make your own luck. Thank you very much indeed. Bye-bye.